Welcome to Uncaged. Today we're speaking with David Hofer. I'm excited to go through this stuff with you. David actually, I think, works in an area where he knows exactly what's coming down the pike. David is the principal managing partner of Highway 33, which is a capital advisory firm. They work on global M&A and financing transactions, and they work in really a lot of highly regulated areas, a lot of, I'd say, emerging areas from automotive, pharma, biotech, SaaS to really emerging areas like cannabis, CBD, and hemp and technology. I'm excited to go through all of that with David, and maybe you can tell us where everything's going to go. But before we get there, tell us a little bit about you and your career.
Yeah, well, thank you, Van. I've had sort of the very interesting juggernaut of career stops along the way. Starting out with being at the big brand agencies of J. Walter Thompson and McCann Erickson. At a very young age, 28, I was running the Buick business for McCann, where I had P&L responsibility for a $280 million budget and 5 car line brands. And it was during that time that we had the pleasure of signing Tiger Woods.
Wow.
I did the big agency world for a few years and then spun off and created my own agency, which was sort of the combination of what you might see in a Shark Tank. So the skill sets of a McKinsey, Booz Allen on strategy development and resource planning, combined with that of a full service agency. Mm-hmm. So all our clients were companies like Audi, Jet1, Microsoft, Raytheon, several SaaS ERP-backed, venture-backed companies, where they came to us because they wanted to know what the product commercialization roadmap looked like. So we did everything from the strategic planning all the way through the execution in trying to win and dominate market share in a fiercely competitive industry.
I love the background. I mean, you may or may not know I was at IPG as well. So we can probably have many, many war stories that we can compare and contrast at some point. But I mean, I also think that mix of a background is really kind of why you're perfect to be doing what you do now. Tell me more about Highway 33 and the business today.
So I shifted to the finance industry back in the, call it 2010 era. I was leading the turnaround and transformation of one of the top payments companies, payment processors in the US. And I transitioned from there to spinning off a alternative lending platform called Advanced Working Capital. I had a credit facility that we raised with a bank in New York, built that portfolio up, sold it in 2014, and Highway primarily to help highly regulated industries like pharma, biotech, and cannabis to build out their plans for growth and, more importantly, assist with the capital stack. How do they raise equity in a very competitive market that's constrained because they can't go to the traditional lending institutions? And assisting with debt facilities as well. So we've really been focusing on that ever since 2014. We formalized it with a partnership with another investment banking group called Capital 33. So Highway's name was changed to Highway 33 Capital, and we've transacted more than 14 states, Latin America, and Canada, throughout the supply chain in cannabis, biotech, and pharma. But I would say 80% of our volume has been in the cannabis and CBD space.
Yeah, I mean, that's been a fast-growing space. Certainly, as far as I can see, the only business right now in New York City seems to be that business when you walk down the streets of New York City. But, tell me a little bit more about the industries that you're working with and what their take is on the state of the market right now. What are they looking for when they come to you guys?
Well, typically they are focused on growth capital, so they're either trying to line up some debt financing or attract equity investors. I will tell you that in the last year, specifically in cannabis, the equity markets have nearly evaporated. There's been too much skepticism over where the industry is headed. There have been multiple legislative attempts with the Banking Act and now with the proposed rescheduling, which we do believe will pass as early as January of next year. And I think what will happen is when you reschedule this from a Schedule 1 to a Schedule 3, which is akin to Tylenol, now opening it up for these operators that have strong operations, have revenue and EBITDA to be able to start borrowing at more cost-effective rates. That is something we're definitely keeping an eye out for. It'll also free up capital. So as we're working on M&A transactions, typically we're representing mostly sellers in this marketplace. But as you can imagine, with any new emerging market, you will have thousands and sometimes hundreds of competitors that end up being a handful over time just through attrition and M&A activity. We saw that at the turn of the century in automotive. We'll see it again in cannabis and CBD.
It's a really interesting space to play in. And I think that anyone who's seen the growth of it, obviously there's going to be fits and starts, but I would say it appears to be a generational shift as far as I can see, in terms of the demand for it. You know, I've been looking at all these other areas like the consumption of beer and wine. I don't know if you ever worked in any of those types of brands in the advertising world, but we've seen an implosion of the consumption of beer and wine for anybody who's below the age of 30. A lot of it is a shift towards using, cannabis, actually, cannabis culture.
I mean, cannabis has outpaced wine sales, on track to outpace both beer and wine sales in the U.S. So it's definitely at a point where you will see continued consolidation, and those that have access to the capital to finance those acquisitions will be the dominant players. You're also seeing more sophisticated operators in the market, whereas years ago it was kind of like anybody and everybody who thought they could win a license and build out a grow or a processing facility and retail jumped into it and realized very quickly how capital intensive it is and how fiercely competitive it is as well.
Yeah, and I'm imagining that's really kind of where you and the team really fit perfectly, because it is kind of that balancing act between government regulation, capital growth needs, and the idea, right? And kind of finding the perfect mix to accelerate and move forward in that type of an environment, which is just fascinating. But I mean, David, I'd be remiss to wonder, what kind of drew you to this capital advisory space? Where does the passion come from for this stuff?
I would say that at the end of the day, we're always looking for emerging markets where there's an arbitrage opportunity. And we clearly see that in this space. We see it in the commercial multifamily sector as well. So we kind of have a bifurcated approach to maintaining our focus on the M&A side of cannabis, biotech, and pharma, and assisting with sourcing and structuring non-dilutive debt financing. And then on the other side, we are sponsoring certain assets in specific markets in the multifamily space, because there's nearly $1 trillion of assets that over the next year and a half will need to be refinanced. So, they took out high cost construction loans, bridge financing. They're out of formula with the banks, and they're having to come to the table with additional equity capital that they may or may not have. You're going to see some interesting opportunities. Now, we're not interested per se in the office space, but with our experience in cannabis and warehouses, we like that sector because you've got direct to consumer needs, so additional shipping requirements there and warehousing. And then clearly on the multifamily side, there just is insufficient housing in this country. And it's a pretty solid asset that you can count on and refinance in the future as these rates go back down.
Yeah, well, I mean, I think you're kind of tipping your hat a little bit in terms of what you see for the following year. But I mean, I think we're all hoping that 2024, I think I felt this way actually for the last several years, David, to be honest. You always hope the following year is going to be just a little bit better, a little bit easier. But next year with the Olympics and the election, and it looks like rates might drop a little bit. What are you seeing next year in terms of some of these sectors?
Well, I think you're going to see, as I've said, a seismic shift in cannabis without a question, rescheduling. So you'll see more players out there that have higher valuations, better positioned for IPO. Now they'll have free cash flow because with the rescheduling from 1 to 3, the IRS 280E rule goes away, which precludes most of these, all of these operators from writing off normal operating expenses.
Mm-hmm.
And so now you've got the kind of free cash flow that they'll need to pursue, accretive acquisitions. And so we're well poised for that. I also think, as again, there's going to be a tsunami of multifamily commercial real estate that'll be sold or refinanced, more than $1 trillion.
Well, a ton of opportunities to consider, a ton of challenges as well. David, you're working on some very, very interesting areas and projects. If someone wanted to learn more about what you and the Highway 33 Capital team are working on, where's the best place to reach you?
Well, clearly they can learn a little bit more about us at highway33.com. And there's an 800 number on there, and we all have direct extensions. So I'm always willing to take a call with somebody that has a real need that fits within those two categories. I would say one of the biggest shortages we've seen, as I kind of alluded to, is the number of equity investors on the cannabis side. They've kind of sat on the sidelines waiting for some seismic shift, legislative change. And, there's sort of a herd mentality with many investors. So I like to find the ones that see the diamond in the rough, so to speak. It's a go where they aren't approach. Everybody's chasing the limited license states. Everybody is, rallying towards the New Jerseys, the Illinois, the Floridas of the world. But there are other opportunities for to acquire strong operators with good revenue and EBITDA in markets that have frankly been overlooked.
Wow.
Like Michigan is an example.
Yeah.
And Ohio is another great market, but again, that's a limited license state, and many people are chasing that as well.
Can you sell across state and now, or is it still kind of like local produced, local delivered solutions?
No, you cannot. That would be against the federal rules for Schedule 1 drugs. So this will will also change some thinking when this is rescheduled. I'll say, because why would you need a grow facility of 50 or 100,000 square foot in every state that you're in if you can transfer across border?
I mean, I that's kind of the initial inefficiency that I noticed when I was exploring the broader industry, and I assumed at the time that ultimately that would favor some of these states like Colorado, maybe California, that had gotten going early, right, and maybe we're a little bit more mature. But I suppose we'll see how that all turns out.
Yeah, I think the big challenge for some of those markets has been the regulatory side and the black market in particular. They haven't cracked down soon enough or hard enough on those that were operating in the gray market. And so the guys that went through the process of getting licensed and having raised sufficient equity capital to build out operations, we're not playing on a level playing field. So I think that's why states like California have been less attractive to many of the buyers that we work with.
Yeah, and on the real estate stuff, are you seeing? I mean, there's a lot of talk about interest rates and how those might dip. Is that something you see happening at some point next year, an early part of next year, or what's your take on that?
I think I do think we're going to see the rates go down probably to the end of next year. I don't think it's going to happen before that time. I think they still want to get inflation under control. I think on the again, it's going to continue to pressure these holders of these assets that have to refi them or come to the table with additional equity capital in order to stay within their formulas. The other thing that I think is going to happen is, because of the increased regulatory requirements on the regional banks, you're going to see more M&A in that space as well. These banks just can't afford to keep up with the big guys, and they can't afford to lend. So, we're doing some things around that space too, where we can take a portfolio off the hands of a bank, specific commercial real estate backed assets in the cannabis space as an example, and taking that portfolio off at a discount. That frees up their capital to be able to lend again, because many of them are capped in this industry.
I think that there's a lot of opportunities in the banking space. I think probably, you and I are both in Florida, probably the insurance space here as well, trying to figure out that world. But Highway 33 has a ton of opportunities over the next year. I can see that. It's been great speaking with you, David, and we look forward to having you back.